Good day, welcome to another episode of Inside Crypto, where we look through the eyes of a hedge fund. I present to you the situation in the cryptocurrency market. We start with, as usual, Bitcoin nets and liquidations. Here, on the left side, I marked for you where those liquidation levels were when we recorded the program 2 weeks ago. This level was very quickly overrun. It didn't work, as they say colloquially, because we see that shortly after, as I said, it was overrun and this level later became resistance. It's interesting that this level, as if even though they are overrun, but it works, I think it works better than technical analysis. This level is the overrunning of this level caused it to later become resistance. I will be observing this, therefore we decided on this form of presentation. Next. What's next? What about the upcoming week? Well, let's see. Liquidation levels accumulated around either 81,000, but there it's already covered with high demand, a lot of competition for entering long positions. And here, what sticks out close above the liquidity accumulation is on the buy side, around 82, 83,000. And I think this is the level worth entering in the upcoming week. And let's also consider that, in my opinion, the commodity bull market is still ongoing. And I am not giving up on my approach that Bitcoin, however, seems to want to align more with gold and commodities than with the market of classic assets. And I believe that this will be increasingly discounted, and Bitcoin will hold its ground. Even if there were a sell-off in the stock market, it would be relatively stronger. Of course, it will decline in the event of a bear market. But since the declines in the stock market will probably last a bit longer and then turn into a broad sideways trend, Bitcoin should perform better here. Therefore, entering long positions in Bitcoin during these liquidation levels makes perfect sense. On the other hand, if someone is looking for shorts, it's more difficult here, as there aren't such large accumulations, maybe somewhere around 88,000. So if you manage to enter around 82, 83, then exiting at 88 definitely makes sense. Or conversely, if we had a spike in anticipation of further sell-off in the States, entering at 88 on the short side also seems like a good idea. Well, but another topic is Ethereum. And here too you can see that Ethereum, just like with Bitcoin, has disrupted those liquidations, those forces. As I told you probably a few episodes ago, as for those liquidations, these are manipulative levels, not super fundamental levels that will stop all price drops, etc. Exceeding these levels should be treated just like before. Technical analysis, which I don't fully believe in, but I do believe in these levels, meaning exceeding these levels causes that level to become resistance, because all those who wanted to enter positions at these levels and profit from it later become on the other side of the market. If there is a hedge fund that wants to trigger a move to liquidate, to jump into long positions there, it ends up with those positions. Well, when there is a market pullback, then all those bought positions become supply. And you can see that it worked perfectly on Ethereum as well. The unwinding of these positions caused that level to simply become resistance later. And what about the upcoming week for Ethereum? Well, here where liquidations significantly exceed liquidity levels. These are the areas. 90.6, 90.6. Here I would look for long positions, a pullback to 1867. I don't think anyone would want to manipulate the market that much, because it will be very difficult to enter long positions there, as there is already a large demand set up. And when it comes to playing upwards, it will be around 2000, but these are not incredible levels. And the higher it goes, the fewer liquidations there are. So I wouldn't expect any particular rallies in this direction, unless it's to that first level around $2,000. If we were to reach there, then definitely exiting long positions or taking short ones today. And that's all for today's episode. Thank you very much for your attention. See you next time.